Good afternoon. In this video, we are going to talk about Bajaj-Auto, and this stock posted a new 52-week high on Friday. In this week, that is the week gone by, the stock prices opened at its lowest point, that is around 1800, and closed at its highest point, that is around 1900 and change. So what is the future course of action of the prices? We are going to take a technical analysis look on the stock prices. We go back 3 years back and we analyze in the calendar year 2010 when the stock prices were around 800 rupees. In this calendar year 2010, stock prices doubled to 1600. And from this yellow shaded region is the calendar year 2010, and you can see here that the prices were at 800 and they got to move around 1600. And from there in the calendar year 2011, the stock moved sideways and was moving in a range of 1300, 1200, 1300 to 1600, and there was no major price movement in the whole year. And we can take few months here and there, so not much of the. And if we see this calendar year 2012, we see a clear trading range, and the range is between 1860 to 1400. Stock prices were moving from 1860 to 1400 and then drifted lower to again to 1400 and then moved to 1860. And in the last week, that is the week gone by, the prices had a break. So what we can effectively say that for the last 2 years, stock prices did nothing after doubling in the calendar year 2010. So this is a 3-year journey, and from here we will take a look at what happened next. This is the daily chart of Bajaj-Auto. If you find here is that this is a peak of December 2011, February 2012, and the peak was around 1860. So this was in a very short period of time, prices moved from 1400 to 1860, and after that it took somewhere around June, July for the prices to make a bottom, and the prices were below at this point. Prices were below the 50-week and 200-day moving averages. From there, prices again started moving, and then they moved to the same resistance point of 1860, which was actually the peak. So technical analysis 101 tells us that whenever stock prices touches its previous high, there is some pullback or throwback to say, and the prices moved down to region of 1700, and then they mended for a while and moved up, and yesterday or day before yesterday they had a breakout. So this was January, and if we take a Fibonacci retracement from the lows of 1400 to 1860, this low of 1700 and change was effectively 38.2 retracement. So everything was going well for the stock. That the retracement which was required. Retracement should happen for a blasting move to happen. This was a previous peak. Prices came to this point, exactly to that point. The prices stalled, moved back, throw back themselves, and then they really collected the momentum, and then we had a breakout. If we again analyze the second chart, which is again a daily chart, this was the same February 2012 peak. Again, prices came here, stalled, but there was a beautiful phenomena, and this phenomena is a moving averages phenomena. When these prices start moving from 1400 region in September around, or in the last week of August, the high was made, but the support was being provided by 200 DMA. Whenever a nice stock, a trending stock starts moving, and whenever it throws back in the initial journeys of the bull move, 200 DMA provides a good support to the stock. That is where you get a validation that this bull move is gonna to continue. Again, when the prices reached to its February peak, there was a throwback, and this time the prices got a support at 50-week moving average, and this was again a validation. Now there is a clear breakout, prices are at 52-week high, so obviously 1860, 1800 region becomes a real good support, and prices will move much higher from here. There is once again a very interesting chart that why this bull move is gonna to continue, and this bull move is gonna to continue because if you see right from July, you'll see that in mid-July it formed a peak, moved throwback, then it moved higher, but from there when it moved back, the support was provided by the peak made in July. Again in August the peak was made, then the prices moved higher, but when the prices threw back, the support was provided by the peak made in August. So this is the process of higher highs and higher lows, a classical case of higher highs and higher low. And now since we have a breakout accompanied by volume, we can imagine that we are going to see much higher prices in Bajaj Auto. A stop loss at around 1860 to 1800 is desired and is a must. This whole analysis was on futures chart, and so since we actually cater to HNIs, we are talking about the future stock prices of Bajaj Auto. Thank you.